boy MIKEHUD checking in. I want to give you guys technicals episode 2. This will be technicals episode 2 that I'm getting to you guys. With this video, technicals episode 2, we'll be focusing a lot more on the Fibonacci play with support and resistance. Showing you guys a little bit of how to find clear confirmation with the Fibonacci, how to understand the Fibonacci correctly, and how to just execute off the Fibonacci with support and resistance in a factor, and just understanding more of getting better entries and just understanding how to execute in the market. So let's get into it. Yeah. All right. So right here we got the charts pulled up. Right here is an example of futures. We have GU pulled up. Futures, but I mean a lot of you guys might be Forex, so let's just go to GU for Forex just to help you guys and make you guys feel a little bit better trading in the market. Okay, so let's get right into it. All right, gang, so right here, as you can see on the technicals, what we will be going over is the Fibonacci play with support and resistance. So I want to show you guys this play right here that I took this week. As you can see right here, we got the point A to point B, and I want to show you. You want to take your Fibonacci, you want to come from with a trending market, so I want to show you a little bit more going back out. You want to make sure you got an uptrend and use an uptrend Fibonacci. Some people try to use the Fibonacci with counter trend trading and try to go point A to point B and get splattered because it's actually a downtrend, but you're trying to use an uptrend retracement Fibonacci, which is not going to work because Fibonacci is really just like support and resistance for a trending market. If it's bullish, you want to use a upwards trend. If it's bearish, you want to use more of your downwards Fibonacci. And if it's bullish, you want to use your upwards Fibonacci. If it's bearish, you want to use your downward Fibonacci. Hope I said that correctly for you guys to understand a little bit more. So I want to show you an example of the Fibonacci. You want to come from point A to point B. You want to get your 100% in a bullish market. You want to get your 100% at point B and to point A to point B. Simple as that. But this is what I want you guys to understand, and a lot of people don't really tell you this. So with your Fibonacci, you want to use your Fibonacci in a way of a bullish push. You want to use your Fibonacci with a bullish push, and I want you guys to understand that. So what I'm saying is, if you're trying to use a upwards Fibonacci, make sure you got a bullish candle. As you can see, you got a bullish push. I wouldn't start it on like a red candle like right here. You got price flying up. Then you get your pullback, which is really just a resistance play. Resistance. Right here, there you go. Boom. On the hours, it's way more data. But so yeah, this is exactly what I seen on my Fibonacci. So this is a Fibonacci play that I want to show you guys with the technicals and things of that nature. So this is how you want to enter this Fibonacci. You go point A to point B and say, okay, cool. And a lot of people, this is the golden zone. This is the golden zone right here that a lot of people talk about. This is the golden zone that a lot of people talk about right here. The golden zone is the 61.8 area. With the 61.8 area is most likely where you'll get that price reversal from that bullish push, and then that retracement of sellers selling off a little bit, and then for them to continue to ride the trend to the upside, you'll see a reversal at the 61.8 area majority of the time. Sometimes it might not be, but the 61.8 area or the 50% area is like perfect targets to get into the Fibonacci play. So boom, I want to show you guys how to enter correctly, technicals episode 2, how to enter correctly from the 61.8 area, or if it was the 50 or it was 32. So as you can see, I want to grab my path finder and get into it way more. So right here, which as you can see, we got a bullish push up, bearish push down, boom, boom, trickle down. So this is how you enter to get the retracement pushing back. In a trend market, we got a bullish push, bullish market, bullish push, bullish market, bullish push. Understand that? So to go back bullish, which we have an upwards Fibonacci, we're looking for a continuation of an uptrend. So what you want to do is grab you a horizontal line. As you can see right here, if we break this area obviously we're in a good situation for the market to continue to push up. So from the 61.8 area, as you can see, the change of character right here, we go up, down, but we didn't continue to go down. As you can see, at 61.8 area, price reversed to go back up, but a lot of people will try to jump in as soon as they hit the 61.8 area in a bullish market. But sometimes price doesn't always truly show that with the Fibonacci. So you want to make sure that you're breaking price correctly. Boom. So you grab your boom. Now as you can see, the change of character more. So I want to remove this. Let's hide the Fibonacci and show you guys the price action. We went from bullish push to bearish pullback, bullish push, bearish pullback. Now it's going to be a bullish push because we're at the golden zone, the 61.8 area. And as you can see, we start breaking back up. So this resistance start becoming support. We broke resistance, came back to support. Now we breaking back up. And now you can see the change of character. We went bullish, bearish, bullish, bearish, bullish, and now it's just bullish. It's a change of character, as you can see. And you can truly find that change of character once you get to your golden zones by just marking off the change of character area. So just marking off the change of character area, as you can see. Boom. So if price comes here and stop, and if it reverses here and it breaks into this zone, we buying. And to make it even safer, where did I buy? Well, this is where I brought at. Where I brought at was 1.2706. That's where I brought at. It's a safer buy for me, which was at the 50 from the 61.8. I got in around the 50 and I just rode the wave, rode the wave, rode the wave. And I actually got out exactly right here because I matched this high right here and I got out around that high. Put my boom. Put this where my TP was, right here. But I saw price start reversing right up in here as I went to smaller time frame, and I just took out because it broke one of my low candles on the lower time frame, created a lower low. So I got out, took my profit. It came back down to the 50, reset it, breaks this area right here. As you see, boom, change of character right here. Next candle printed above, get in for your buy, which is starts below this candle, or way down here if you want to, you know, a little bit bigger. But just make your stops tight, man. So continuation to the upside, as you see. So that was a quick technicals part 2 video. Technicals episode 2 part 2 video. Show you guys the Fibonacci play and how to enter the Fibonacci more correctly. If you got a bullish market, you want to use an upwards Fibonacci. If you got a bearish market, you want to use a bearish Fibonacci going downward. Remember that. It's going to be the safest bet. Don't counter trend with the Fibonacci. Some people do it, but it's not safe. And yeah, just stay true to the Fib. That's another technicals part 2 video. I want to show you guys, if you didn't check it out, check out episode 1 of the technicals part 1. Pretty cool, pretty cool. So yeah, and I will remaster all these videos in the future to make them even better, even more dope. I'll remaster all these videos, but I'm just pushing out a lot of the content right now just to give you guys something to learn from.